In this video, I'll be sharing with you the Bollinger Band and the Relative Strength Index RSI trend trading strategy. So I'll be explaining to you how you will use the Bollinger Band to determine the trend of the market, where to look out for, the zones and area where you will be looking forward to either sell or buy, and the entry confirmation you will need when price come to these zones or area. My name is Soji and you are welcome to Soji Forex. If this is your first time of coming across this video, please do not forget to subscribe to the channel, give this video a like, turn on your notifications so you'll be the first to get notified when we upload our next video. And also there is a link in this video where you can join our Telegram group and you'll be opportune to ask some questions and get to know more about what trading is all about. So first, let's begin with the setting of the Bollinger Band. The period is 130, deviation is 2.0, and you can take a screenshot of that and do your setting. Moving average 10, exponential, moving average 25, exponential. Then here is my relative strength index. The period is 9. So in the place of the level, you can see that, and then here the color is your background color. So if your background is black, all you need to do is for you to change that color to black. Then we have our commodity channel index. So once you've done your setting, your screen will look like this. So let's begin. First is for you to determine what is your trend. In determining your trend, you will come to H1, 4 hour or daily time frame and above. So from 1 hour upward is where you can determine your trend. So you'll be determining your trend using the Bollinger Band. So the tool you will use is your middle Bollinger Band. So you will use your middle Bollinger Band to determine the trend of the market. So once price has risen to above the middle Bollinger Band, it is an uptrend. And when price falls to below the middle Bollinger Band, it is a downtrend. The process is as simple as that, either on a 1 hour, depending on the time frame you want to determine your trend. You can do that on a 4 hour as well. And as you can see, this is how it works. And then you can do that on a daily time frame as well. So depending on the time frame you want to determine your trend. So let's go on. This is a 1 hour time frame. So we are using 1 hour in this scenario to determine our trend of the market. So now we have established our trend. The second thing you need to take note of when determining your trend, for instance, in this scenario, price cross above the upper Bollinger Band. Now price can rally up and at the same time rally back to the downside. So you will want to see a kind of retest. Like in this scenario, price went up, come back, retest the moving average or the Bollinger Band before continuing to the upside. So that is a way to validate that this is not just a rally but a valid change in direction, especially when price is close to the Bollinger Band. Like in this scenario, price is close to it, right? But in this scenario, you can see that this particular scenario, price break through straight up and went a distance from the middle Bollinger Band. So this scenario is not necessarily, you won't get that retest, but rather you'll be looking for an entry. So we have talked about how to determine our entry. Number 2, how do we find our point of interest? Now, once price has pulled back to this below the Bollinger Band, like in this scenario now, we will look forward to number one, when price retests this Bollinger Band. Now we are in a downtrend. When price retests the middle Bollinger Band or break through it, you can see that price pull back and closes. Price pull back to the middle Bollinger Band. So price pull back to the moving average and then give us a rejection towards the downside. So our first point of interest, or the zone we are expecting to look for entry, is that zone where price pulled back and was rejected by the moving averages. So this zone is our first interest zone. Then number two, we are going to look for an imbalance, which is a fair value gap in this movement. If you don't know what a fair value gap is, I'll refer you to watch our previous videos on how to identify that on this channel. So you can see now, this is it. So there's a fair value gap in this zone. Yeah. So all of this zone is a fair value gap. So now, how we have determined our trend, we have marked our point of interest. So what do we want to see? As price opens, we want to see price pull back either to this zone now and then move back to the downside. So this is what we want to see. Alright, so as this is happening, we want to see our CCI, either it pull back to the 80 zone of our RSI, and then we want to see a bearish candlestick pattern, either a bearish engulfing or a pin bar or a hammer, depending on the formation, and then our CCI return, and then we are on our way to the downside. Or the CCI will pull back to 50 and closes below 50. Then we'll make our entry and we'll be on our way to the downside. Or this will be on a 15-minute time frame. So you can see that this is 15-minute time frame. So this price now can repeat the same thing on a 15-minute time frame. So price will pull back here on a 15-minute time frame and then move to the downside, or price will pull into this upper one. And of course, this upper one, if you look at it carefully, there is a liquidity sweep on this zone. So the other block up there is very much valid. So price can pull all the way to that side. But on a 15-minute, when price pull into this zone, when price pull back here, you will need to get a divergence. And if you don't know what divergence is, please we'll refer to our previous video where we've talked about divergence. So we want to see a divergence where price will be giving us something a higher high, and our indicator will be giving us a lower high. So that is just how exactly you can take advantage of this strategy. Let's look at another more asset. Now this is USD CAD. Now you can see how this moves. Okay, now price came below the middle Bollinger Band. This is it. Price pulled back to below the middle Bollinger Band. Price retested it and then got rejected and closes here with this massive candle movement. So your entry is no longer on this candle movement, but however you want to see a pullback again, and as you can see, price pullback. You see that pullback, and then it gave us a hammer, which is a bearish pin bar that closes below. This hammer closes below the moving average. So that would have been your entry, and you would have been in that way. So after that, where is our next point of interest? Remember I told us that our point of interest First will be that candle that was rejected and closed below the moving average, which is that hammer. So this is the candle, and you can see exactly what price is doing. Price has pulled back into that candle. So in this area, we are having a typical example of what we have explained in the other place. So as price is opening for the new session, price has already pulled back into the zone, and then we are seeing some sort of rejection, pin bar, rejection. You can see that this hammer, and if you look at it, we are having a divergence even on this 1 hour time frame. So this is a divergence. So we're having a divergence already, and in all of this you can see our relationship of price to our RSI. Okay, so price is rejecting from the upper side of the RSI, but now considering where this price is, okay, for us to make this entry, we are going to be patient enough to wait for this RSI line to cross 50 zone. Okay, be patient for it to cross 50 zone before you make your entry. All right, that is for 1 hour. But if it is on a 15 minutes, you can see now that on a 15 minutes we already had this same movement. We have had divergence, and then you can see all of that now. We have had bearish candles. So if you are on a 15 minutes, you should have made your entry when this price crosses the 50 zone of the RSI. Otherwise, all you need to do is for you to be patient enough and wait. You can as well use your trend line, and you wait for price to break your trend line to the downside before you find your entry. And of course, price is around the upper Bollinger band, which serves as our point of exhaustion. So this is how simple you can include this in your trading strategy, and you will be amazed as how your trading result will be. Now this is GBP JPY. You can see that movement of price. Price is currently in a downtrend. So remember, in this scenario, we have a smart money cube here. This is a smart money cube, of course, and this is where it is one of our point of interest. If you don't know what a smart money cube is, please refer you watch our previous video. And then here we have this lower high. Yeah, remember I talked about looking forward for the candle that rally back into our moving average. Okay, so we have all of this. This already price, we test it a little. So if you were here on a 15 minutes, this would have been an entry for you. So you can see that pullback. Yeah, and then you see price around our RSI. See that candle formation, you would have been in that short trade. So but now if you were here when this engulfing happens, you wouldn't have made your any of this entry. The reason why, on a 1 hour you wouldn't, yeah, you shouldn't have take this entry on a 1 hour. The reason is because our CCI line did not come up to the level of 50 before turning back. So no entry for that on the 1 hour. But when you come to 15 minutes, this would have been a sniper entry on a 15 minute, considering the candlestick formation that happens in that zone. So we'll be looking forward that the price will pull back into that zone here. That price will pull back into it and then reverses to the downside, or price will continue into this zone and then reverses. However, provided price is below the middle Bollinger Band, below it we are only looking for opportunity to sell, and when price is above it we are looking for a buying opportunity. So you are wondering, how do we buy? If the opposite is how to buy. So I don't want to go back into using past price behavior, so we are focusing on the current trend. So this is also applicable to volatility indices. So you can see all of this. In this zone, what happened? Price already below the lower band. You can see price is below it. So, and then when price comes below it, price pull back, and then here now is our point of interest, because from here we are seeing a structural point. So we are marking that zone, and what is next? We want to see price pull into this zone, and then move to the downside and give us either a candlestick pattern on a 50-minute or a 1-hour time frame. Okay, so why do I mark that zone? If you look at it critically, price pull back from here into this zone, right? And then when price pull back, we have this bearish candle that closed price back below the moving average. So this is an order block, all right, and it creates a new lower low. So here now is our lower high. Okay, so that is a structural point, and that is why I am marking that out. Let's see what is happening now. This is crash, but you can see how this is playing on and on. So this is crash 1000. Now we have a smart money cube here. Price is already below, so what do we want to see? We want to see price either pull back to this point and then continue to the downside, and as well as if it escaped that, this is also a valid zone. So this zone is also very much valid, and then price should come here before coming down. So thank you for watching this video. Please do not forget to like, share and subscribe, and also remember there's a link where you can reach out via the Telegram group. Thank you, and see you in the subsequent video.